Hey guys, this is Boris Schlossberg, and this week on the crosses story for June 13th through 17th, I think there are three pairs that are really worth looking at from a technical point of view because I think the stories here could be quite interesting as the week develops. So let's just take a look at our charts here, and let me start with the first cross, which is the Euro-Yen cross. And the reason why I'm kind of interested in here in the cross, first of all, we made fresh yearly lows. Whenever you make fresh yearly lows in a pair, that's a significant signal by the market telling you that there is lots and lots of selling pressure on this particular pair. And of course, any kind of a pop against this probably is going to be an excellent opportunity to short. This is really a risk aversion trade. This is also a possibility, I think, of the market starting to freak out about the Brexit trade in a global sense, meaning that, if UK unwinds, it's not just becomes a European story, it could become a global market story in some ways as it creates turbulence all across. And we have two things going on this week. We have the FOMC meeting, we have the BOJ meeting. All of those things could buttress the move. Now, if FOMC is uber hawkish on this particular case, we may be able to find some sort of a support here, excuse me, for the near term at around the 120 level. 120 also very key psychological level. We haven't seen that level. Let's see how far we go back. Let me go on the weeklies. I wonder if we go this like 3 weeks, 3 years. Yeah, we haven't seen this level in more than 3 years. This is a very big level. By the way, look at the weekly shooting star candle. Very negative formation. Really screams downside. Let me just go back to let me go to the monthlies here. Just bear with me a second. And maybe 5 years. Yeah. So we have to go back to 213 before the 120 level was touched. And that point, sort of the lows, you can see on the monthlies, the lows were 119.74. Around this sort of 119 as a key support level. So if we break the 120, the 119 is going to become really into play on a big monthly basis. And that's why I think it's kind of an interesting momentum trade at this point. The other trade, now I might as well stay on the monthlies because everything is really happening in a big macro case, is the pound yen. Now, so the pound yen story to me is just fascinating from every possible aspect. If you get more leave stories this week out of the Brexit polls, and if, let's say, the leave even opens up a bigger lead and everybody starts to really freak out, this becomes a very serious possibility. Of course, you get negative cable flows, but you will also get negative dollar-yen flows. And we're now looking, first of all, this is already also a yearly low. I believe it's a yearly low. Let me see this. Yeah, it's the low here is 51. No, not quite. Not quite the yearly low in pound yen. We're 51.64 in April, and we are now 50. No, we did 51.49, I guess. Yeah, we did create a yearly. We just didn't close quite on the yearly lows. But be that as it may, my point is 150 just as seminal in pound yen as it is in euro yen. And in fact, if there is just a plethora of negative anticipation of the Brexit, this thing could crumble like a bad paper plate straight down. And really, the support just doesn't even come in until sort of 47 on a monthly basis, right? So there's about 400 points of downside price action. The problem is, of course, this is an incredibly volatile pair. And if let me just come back on a more granular basis to the dailies. And if there's positive news and a sort of relief rally, we are kind of at a double bottom formation here. The squeeze will easily go up to 55. And really doesn't encounter significant resistance on the charts till 160. So you have to be prepared. If you're going to trade this to the downside and you're wrong, this could get squeezed very badly. 55, I would say, would be the initial kind of a pop-out point. But this is a very volatile trade. One thing I would say about the pound yen, whatever you do with this, it must be traded on very small size with incredibly large stops if you want to trade the play. But as far as just momentum trades and crosses and all sorts of fundamental technical factors coming into play, the fact that we're very close to the yearly lows, the fact that we're close to the 150 mark, the fact that we have all this news swirling around could quickly push us into a very strong fall as we get down. And then the last cross that I think is going to be interesting this week, although this is sort of a post-mortem cross, but the RBNZ move really moved the Aussie Kiwi also to fresh yearly lows to this 104 level. We have to go back. I think we don't. I don't think we. I think we can go 3 years and we'll find the So it's not sort of multi-year lows that we're going to be looking at in the near future. But of course, the whole idea of parity, which is where the market very much is focused on the Aussie Kiwi, could come in. Of course, not necessarily next week. We don't have really that much data set. But if we have negative Australian news, that's going to push the Aussie Kiwi even further to the downside. For the more immediate basis, I think there's reasonable possibility here that we can explore 103.50, possibly, maybe even 103. The parity level is so important that I don't think you're going to get such a massive unwind in Aussie Kiwi this week. But it is essentially a very strong downtrend trade. Any kind of a pop in this downtrend pretty much is a short the rally trade unless we literally clear to be a legitimate long trade. In other words, to completely destroy the shorts in this particular case. This trade really needs to close at 106.50 on a closing basis, and ideally 107.50. 107.50 is sort of the big resist area here. So a full V-shaped turn, which would just completely collapse the shorts, would have to take us all the way to 107.50. It would have to be an uber bullish Australian news flow type of a trade for this thing to work. Maybe very positive employment data with very negative dairy prices could take us a couple of 100 points on this trade. But if you're sort of playing the idea that employment may not be stellar and dairy prices kind of maintain their poise, fresh lows definitely could be in view here, and the 103.50 is the next area for Aussie Kiwi. So that's kind of the three interesting cross trades. Let's just do a review of where I think the levels are. And we'll start with Euro Yen. The resistance here, the near-term resistance is 122. If we're above 122, the shorts are wrong. But what's really fascinating is the 120, which is right there, where just as we pretty much open for Asia trade, is going to be a key level of testing. With pound, you got to get very wide. 155 is sort of the cosmetic resistance level, but it's really the true level here. The sort of really big level is the 160, which means you have to give yourself massive amount of room to kind of short this thing. But the support here, 150, and then after that, I think it goes to 145 in a heartbeat if we get negative news. This is the, if you want to trade Brexit on a volatility basis, this is the one that will either give you a heart attack or could just make your month. This is the interesting trade to look at for this week. And then of course Aussie Kiwi, the continuation of Kiwi strength here, especially if we get some weak employment data out of Australia this week, could take us, the resistance here would be 107.50 to the upside. That was my argument. But the support here at 103.50. So the downside, there's still potentially maybe another 100 points to the downside. As far as the upside, you can short all the way up to 107.50 because the trend is very clear to the downside on the Aussie Kiwi trade. So that's how the crosses shape up this week. I wish you guys the best of luck, the best of trading, and I'll see you guys next week. All the best, Boris Schlossberg.